Thank you, everyone. After a very interesting panel one, we now have a very, very interesting discussion on B2B payments and transaction banking. So may I request my colleague Vincenzo to come up on stage, please.
Thank you, Amit. So I'm glad to invite on stage Mr. Anith Daniel, Head of Transaction Banking at Emirates MBD. Anith carried also almost 15 years at Emirates MBD between transaction banking, private sector, and corporate, with previous experience at AB and Amaro. Then I'll invite the second panelist, Mr. Hamayoun Khan, Senior Executive, specialized in transaction banking. He's the Head of Transaction Banking Group at Commercial Bank of Dubai. And then I'll welcome the third panelist, Mr. Parag, Ekbote, Head of Business Development, Corporate Banking at Oracle. Parag also carries over 30 years of experience across several companies, Intellect, Macy's, Funtech, and CashTech. Okay, so I will be joining you shortly. I'll start with a first question to you, Anith. So, see, innovation in transaction banking has actually been spearheaded by strong fintech collaboration, right? And we know that, for example, Emirates MBD has also launched a supply chain platform recently. So how do you see the collaboration with fintech as a key enabler for future?
So it is one of the most important questions that plagues banks. Buy versus build, right? So do you want to buy or do you want to build? And I think the answer to that lies in, if you go back to what the previous panel discussion was all about, and as Sanjeev started off, performance scorecard, right? So you have financial, and then you have your customer preferences. What does your customer really want? And that boils down to, we spoke about artificial intelligence, we spoke about data, and we spoke about UI UX. So if you really translate that into UI UX, that's what it is. Where do banks lose today? And we heard a lot in the previous panel about how banks are reticent, they don't move as fast, is because it's too big an organization and too difficult to change things because you work in silos. Fintechs or tech fins, depending on which side you look at it from them, whether it's a SaaS platform or they're actually a commercial enterprise which you can gain from, is going to be here to stay. And I don't think banks can wish that away. It's going to be one of those plays where you have to decide as a bank what makes sense to build and what makes sense to buy. Now, it's a difficult decision for large banks, especially, because when in the context of UAE or in the GCC market, where you have a large market share, if you give access to a fintech to your customer base, then obviously you are helping them from a valuation story. And the question that comes is, what do you get out of it? And then you go into your management committees and excos, and the question will be raised as, why do you want to do it? Because you're literally opening the door to 25% market share or 30% market share, which gives them a valuation gain. And what does a bank really get out of it? So I think that's the reason why I said that it's a carefully thought out decision. Can I do away with it as a bank? The answer is no. I think we all have to look at very carefully crafted fintech collaborations, whether it's a SaaS model, whether it's a complementing solution that the banks would want to play on. But you cannot wish that away, and I think that's here to stay.
Thank you. So I will go to the second question to Hamayoun. So how have you seen the B2B payments evolve over the last few years? And what are the trends that you foresee that GCC banks should watch out for?
Okay, thank you very much, first of all, for providing me this opportunity. So, see, my view on, I think to Chetan's earlier very detailed presentation, and he partly covered this aspect of B2C growing at a much phenomenal pace. And we have seen all post even COVID scenario that B2C framework is largely sorted out, and still there is a growth happening there, but a lot more we have seen paperless, it has gone in that way. But B2B evolution has been a little bit on the slower side. And I think before we address the underlying reasons, we must understand one thing, that B2B, when you deal with two business enterprises, there are relatively lot more challenge that kicks in. And apart from the thresholds in first place and the KYC challenge, these are the two, because when you deal with two businesses and the underlying transactions, it's not more so on the consumptive side. So, and probably the reason why, apart from the industry in itself in the country, there has been challenges which some of the platforms are unable to address. In my view, this is historical, but what I see next 12 months in B2B space, especially in UAE, and I'll touch first domestic and I'll come on the cross-border payments as well on B2B, is first thing is that this NPSS, and then part of which is this instant payment platform, I think it's going to address the real-time challenge that we face today in terms of execution in the real-time instant payment. Now, not only it is instant, but it is encompassing the e-wallet side as well, apart from account to account. And also it will encourage the touch points from mobile number and email to initiate the transactions, which is, I think in West, it is pretty common. But I think if we are able to roll out this is going to change dramatically this bit. There are other value additions to this platform as well, in terms of the check payments enablement digitally. And probably this is going to change big time when it comes to the looking forward approach on B2B payments in the country. I think on the cross-border side, and more so your part of your question is intended towards the GCC. I think once these country enablements happen on the digital rails, in the real-time scenarios, then the integration will eventually kick in. So there is a company, Gulf Payment Company, who has been mandated to do this, the regional integration of the various payment platforms. But I think KSA, Kuwait, and probably Bahrain has already gone ahead what NPSS is today, or is going to offer in next few months. So I think once these entire countries' ecosystem is up and running, and then of course the integration may happen. Right now, there is not a single platform which connects the entire world on payment, and I think SWIFT is the biggest reliance in executing that. In the domestic space, based on certain corridors in UAE, there are various payment rails which are ex-SWIFT, for example. But those are very specific, either host-to-host connectivity between the two banks, one in here and one in, say, India, or maybe in Pakistan, or there is maybe an intermediary fintech involved to make it happen, some of the consumer payments or remittances today, which are pretty much in real time and cross-border as well. However, there is no integrated global one platform which connects the entire world in that way, to my view. Once we reach to that stage, I think there have been talks on the regional platforms, and if GCC comes up, India has its own one of the leg, and I think Russia probably is also under a different pushes is coming up that way. China has also. So probably maybe from 3 to 5 years, if these regional platforms get connected, then we can talk about the real-time cross-border payment happening anytime soon. Visa, probably I think Chetan touched this point on MasterCard and Visa on B2B payments. Visa Connect, I think, is coming up as one of the alternate solution to SWIFT to ensure the real-time payments. But in my view, I think apart from the commercials, still they will use their own rails to do that, and probably the IBAN dependency or IBAN credit eventually, that is something that I need to validate how eventually will happen. In my view, or my information, no UAE bank has subscribed to Visa, this B2B Connect. But I think this as an option has come up in terms of the cross-border real-time payment scenarios. So that's, I think, I'm able to overall address your broader framework in which we are. I've lived my majority of life in front row. And I still meet large corporate clients from the bank side. So clients are really looking forward to, in payment world, what's next. I think more so from the channel side today. So barring these developments, which will eventually kick in over, say, number of months from now, from the regulator side, from the banking side, I think post host to host, which is again around 5 to 7 years old story, corporates are looking forward to the API-driven payment connectivity with the banks to ensure that they have a more STP sort of thing or more enablement happen in terms of execution. But I don't have a solution right now, to be honest. What's the next in terms of when this API-driven thing will happen? It's largely the ecosystem play. Eventually, even if I take the lead, it will eventually transgress into the conversation that what other banks and how a uniform platform for that API approach can happen. Because this is another one pain point for a large corporate today, is that he has to step into various platforms of the various banks if he is banking with 5 or 7 banks. How the uniformity can happen by a single connection and he can execute the transactions all along. So yeah, that's something in response to your question, I hope so.
Thank you very much. So, Parag, see, payments, collection, liquidity management are all, let's say, the key areas of focus for most banks. What are the other areas of major opportunities in transaction banking, and what's been your and Oracle's experience in driving them so far?
Sure. Thanks for giving us this opportunity. So I think, of course, the traditional payments, collections, liquidity are these very standard products that banks have been offering. But given everything that Hamayoun talked about, I think the fundamental changes at the infrastructure level is compelling banks to rethink the way the construct of the product is. So things like he talked about IPP, which is coming in here. I have the vantage point because I look after a much larger region from a JPAC MEA. So I have the benefit of going and speaking to banks across the board. And what I'm seeing is in instant payments, which is now, I think, about 50 plus countries are deploying it or have deployed it. The underlying payment product or the underlying receivables product itself is changing, right? And there are some very good examples that we've seen when I speak with transaction bankers in other parts of the world. Let's say in India, for example. The fact that there is UPI and the limit of a UPI payment, there's a big debate as to how much it should go. But I see a lot of interesting use cases around initiation of those payments on the UPI itself for SMEs, and of course that's going to go into corporates as well. There are instances where I'm seeing, and again to the point that we talked about from the whole advent of ISO 20022. The kind of underlying rich data set that you're going to get out of all the work that each one of us here in this room is going to be doing, that data set, along with the standard benefits of ISO 20022 in terms of good sanction screening and STP and higher STP and all of those aspects. But the fundamental thing here is a chance for banks to really monetize that. So again, the product construct is changing. When it comes to the traditional products, as you're calling it. Again, a good example of IPP coming in, you will see elements of instant treasury. You will go into a thing where when you, people like Hamayoun or Anith or any of you guys going and talking to customers, the fact that now I can make a payment instantaneously is going to mean, what does it mean to my liquidity product at all? Are we going to move from, let's say, to a intraday liquidity? is a very interesting question to be asked if you're a transaction banker. And so to your point, the first part of your question in terms of these are traditional products, but there's a lot of churn or a lot of rethinking that is happening there. The second part that you talked about in terms of what's really going on, other products. So there are lots of very interesting use cases that at least we are seeing on the usage of virtual accounts. That's definitely, and given what IPP will do and what NPSS will do here, you will see very interesting product sets in terms of the wallets, the virtual account, combination of the wallets and the virtual account products from banks, and of course the consumers or the corporates in this case, right? So we see virtual accounts as a very big play in that part of the story. And then to circle it all together to some of the points which were made in the previous panel, while we are talking about embedded finance more from, let's say, on the retail consumer side of things, and there were many examples like hotel bookings and airline bookings and all that we spoke about. But what we are seeing really is embedded finance really coming also to the corporate and SME banking or commercial banking, whereby embedding banking services within the place where the platforms rather, which are used by the corporate customers itself, and that being ERPs. So this whole combination around what is it that banks can do in order to make themselves available, or making those services available in these platforms embedded. So that's a larger thing that we are seeing talking to banks across. It's a long answer, but I hope I...
Thank you so much, Parag. So I'll go back to you, Anith, with a second question. So what are the key areas of innovations that you actually see in UAE, GCC countries, which are driving in the transaction banking space? So if you look at your experiences, what would you pick as some of the most impactful ones from a larger industry context?
So when I'll take a leaf out of what Sandeep said earlier, right? So we spoke about ABCDE earlier, and he identified artificial intelligence and cloud to be fundamental or cornerstones to what banks should do. So ENBD today is over 90% plus cloud native. And we've got an advanced analytics engine which is sitting as part of our center of excellence. If we look at both these two key enablers, I would pick two things as transformational for GCC region and for UAE as such, which is the entire acquiring space, given what is happening with NPSS, with the whole technology around being built on instant payments, as one of the key areas that will transform how payments are made today in the UAE and in the GCC with both Buna and GCC RTGs. So that's one area, for sure. The second area would be, when we speak about payments, and payments is quite loosely used in the sense that it's both used as a payments or collections. And if you really look at the B2B space, what are we effectively managing as transaction banks? It's nothing but payables and receivables. And within the payables and receivables space, you can either use a check or you can use an LC, right? So, I mean, it's the product set depending on what the client wants. Supply chain, therefore, becomes the second most crucial aspect, because when you look at B2B payments, other than B2C, which are your retail use cases for clients who are in the retail side of the business, B2B is largely about supply chain. How do you make payments to your suppliers? How do you receive money from your suppliers? What do you do with the credit periods that you get? How do you enhance the credit period? And how do you work around with a working capital cycle to make it negative for you? And that's really the real key differentiator which corporates will be looking for in the years to come in the GCC. Now, whether you enable it using host-to-host, marketplaces, or API banking, those are enablers, but it goes back to what we spoke about earlier, that what is the need that you're trying to solve? And the need that you're trying to solve is effective working capital management, therefore reducing your financing cost. How can you do it? Embedded finance within that payment data space. Because if you really look at it, whether we look at acquiring or payments as a business, which is across trade, there's a whole big piece that sits behind it, which is data, which enables you to drive or design products which you can then sell, whether you use AI, ML, whatever is the tech that you put behind it to design those products. It's actually addressing that part of the need where you're capturing the data from your core systems on who your customers are receiving money from and who they're paying to, and what is that being used for. And that's actually helping you drive that decision around what products you need to design, which will meet that need. So I think these would be the two key areas within banking or transaction banking per se, which will be transformational in the years to come.
Thank you. So, Hamayoun, you've been driving a number of digital strategy initiatives focused on cash management and trade and GTS. So how have the customer expectations evolved, in your opinion, particularly between the corporate and SME sectors?
Yeah, I think it's a very relevant question for Commercial Bank of Dubai. We are in the midst of a massive digital transformation for our wholesale bank, and emerging corporates is part of wholesale bank. So of course, part of your question is embedded in my answer. So I think, first of all, from the customer expectation evolution, I mean, customer, we have talked earlier as well at length that customer experience is, and maybe, customer needs is something that is paramount in all these transformational journeys. And I'm not going to say anything more scientific about it. The only thing is that in our transformational journey, we are bifurcating it into 3 sub-journeys. One is the touchpoint journey, which is the channel, first front-end channel. And then second is the back-end processing, because if a customer is asking for a transaction, you may be able to give him a very, very efficient touch points, but if your back-end processing systems are not enabled to gear to that sort of commitment of turnaround time, then of course customer experience may get lapsed. And the third sub-journey is the post-transaction execution in terms of confirmation, advices, or statuses regarding expectation of the client. So if in our view, and we are trying to plug each one in one way or the other, but primarily we are in the midst of arresting our front-end channels, digitizing it into a single sign-on methodology to ensure that client has that sort of a basic comfort in accessing all our as per his need, accessing all our platforms in one sign-on. So we have been able to roll out our cash and liquidity platform, which is amalgamation of 13, 14 different modules and which caters to each need of the client. And then we are embedding it with our corporate internet banking so that the journey from the single sign-on perspective remains the same. On the trade side, again, trade digitization is pretty primitive. It is just across the entire world. There are a lot of talks going on about blockchain, bringing on enablement of trade into digital ecosystem. I can talk at length on what are the barriers, challenges in the trade world to digitize, but at least on the front end side, we are going ahead with one of the leading fintech to help us available that platform where client can access all those trade products and its execution in a way that we drive that first movers advantage in the country. I think I'll take a little bit of step back and add on to our friend who was talking about supply chain, and I'm all aligned on this, that eventually, and when you talk trade, you can't absolve supply chain, because eventually it is what supply chain is all about. The only thing is that if there is an international component involved in trade, it makes supply chain a bit international. So I think on the same note, and as a part of our transformational journey, around 2 years ago, we are the first bank in UAE who rolled out our engagement with Demica, which is again London-based fintech, who is the platform again is absolutely 100% STP. And we figured out the pain point of this supply chain finance in a digital manner. So of course, part of this financing is already done by all banks in the form of vanilla invoice discounting on the receivable side. However, to digitize it, taking away the pain of the customer to print those invoices, present it in a paper form, either through Runner or something like that. I mean, this platform took away everything, and we carried that experience of Demica, who is dealing with 500 FIs in the world, and tried to replicate that competitive advantage that we can bring on in terms of digitization this solution. So of course, depending on the bank's appetite, everyone is into this. Every bank is into financing this. But how you make the journey of the customer, digital in a way that you take away these pain points. So that is something very important. So to answer your question on the last note, that I think eventually the customer expectation, and that's to customer needs. So I don't see any revolutionary customer needs on the business banking front. Business banking means including corporate as well. I don't see some of those needs getting revolutionized. So needs are very, very basic, and needs have been there for decades or for centuries even. The challenge is how you address those needs as a financial institutions. And when you address those needs, the customer expectation more so in the revolving digital fintech world, where fintech, some of the fintechs are able to produce that sort of advantage to the customers, that he started questioning banks' overall value in this entire scheme of things. So that's where I think we are cognizant as a bank, as a team, that we need to arrest those. We need to address at each step of our journey when we deliver the solution to the customers.
Thank you so much. And Parag, what are, in your view, the top digital transaction banking capabilities that the market will increasingly need in the coming years? Would you actually see a significant difference in the digital offering for SME versus corporate product capabilities?
Yeah, I mean, there are two aspects to the whole digital discussion that we've been having, right? One is, are the needs different? I would say to a certain extent they do. Whether it's a small SME or whether you're talking about a large corporate, I think working capital, as Anith was mentioning, is the core need. So the fundamental need remains the same. It's just from my perspective, the way I see it is that while the needs are slightly different, the issue becomes, from a transformation perspective, do banks need two separate platforms to run that? So that's a technology discussion or a technology question to be answered. Now, I've seen models where banks have gone ahead and kind of innovated and built two separate platforms to run these businesses because the needs are different. But technically now, given the technology available to all of us, that doesn't necessarily, it's not really that relevant. You can run both the banks on a similar technology stack, and given the composability that someone was mentioning in the morning, given the architecture is evolving, you can configure products and these services on a same platform to serve different customer segments. So that is really the way I see this whole movement towards. So yes, their needs can vary, but at the fundamental thing, it is about working capital and what really banks are doing in order to kind of help both the segments of the marketplace.
Thank you. So I have actually another couple of questions for all of you, but before I move there, I asked the public if there is any question from the folks.
So before I start, I want to thank all the panelists for sharing the insights around transaction banking. So my question is, Anith, to you and to you, Hamayoun. It's more on to do with customer segments. And the question is, from the last 3 to 4 years, do you see the shift has happened in terms of banks' focus, whether it's large corporates or it should be the small and medium enterprises, from the way transaction banking has progressed over the years?
I wouldn't say there's a shift. So each segment has its own requirement. Corporates would typically lead with innovation in the digital space in terms of transactions. So you would see more large corporates using API banking, moving away from host to host, looking at more technology-based solutions. SMEs would be not so savvy to use API banking at this stage, but there are some who are coming up who may want to experiment with that. So I think it's a different client set and a different client need. So whatever we would want to look at for the SME market will be more mass market and will be more consumed by the mass market within the SME world, which is what we see across our entire SME base. So for example, our online banking channel is the SME channel as well. And most of our SME customers are quite happy with all the services that are there on the online channel. But if you look at a real large corporate or a MNC company, they will not be satisfied with coming onto a web channel for their transaction banking need. And they will look at more specific tech-based solutions. Now, whether it's Swift for corporates or it's API banking, they will have very bespoke solutions which will tie in with either with their regional treasuries from a cash management perspective or their global treasuries. And they will not want to deviate from those principles that they've set at the head office levels, because everybody's moved to a shared service center with a regional treasury, and they would have very clear prescribed rules in terms of what they will connect with banks on. So a few years ago, it was treasury aggregators who were ruling the space when you look at large corporates. Now corporates are actually looking at direct connectivity. In markets like Egypt, Saudi, you have Sadat, Fowry, so there are different aggregator models there. In UAE, again, very early stage, open banking is yet to come in. NPSs will be the start of that journey. So I think, to answer your question, I won't say there's a shift. It is just that you build real high-scale tech solutions for your ultra top-end segment of the clients who are in the corporate world. And by and large, the SMEs will benefit from that space. They may not use that, but they're quite comfortable with the current technology stacks that are there in the banks. I think it largely addresses most of their needs.
Thanks, Anith.
Thank you. Any other question?
No, I want to hear from Hamayoun as well, based on his experience.
So I think I will answer it in a way that you have to see the wallet first of these clients. So, and wallet again on the lending side and purely cash management or a deposit-driven, liability-driven relationship. Because in SME world, this discussion is very paramount, because the breadth of the SMEs as per definition, where it is less than $1 million dirham turnover company to around 250 million dirham company as a turnover. The needs really and the sophistication and the complexity really hovers around various other parameters. So I'll second Ankit points to the fact that there is no as such shift, because these are two very different segments, and the usage of technology may be very vanilla and very plain for SMEs, and that's true if on the transactional side without credit lending involved. And within even the credit lending, the digitization has happened, and again the disruption coming from some of the peer-to-peer lending groups or platforms where they are posing challenge to the SME, formula-driven lending or a certain checklist-driven lending. But if you take care of relationship-based portfolios of even SMEs, I think it still basically restricts itself to the web-based banking, and even if there is a trade involved, there is nothing much today our UAE banking system offers in that space. But that's where again the opportunity is. At least I can talk about my bank, where we are trying to align our basic channel touch points, and even as basic as onboarding the client. We have digitized this solution of onboarding absolutely without much of a paper play in this very recently, and we are working on enhancing its application to our emerging corporates as well. So I think it's an area which is evolving per se, but it may not cannibalize each other's space, because these are very two different segments, both from the wallet perspective and the complexity / requirement perspective. As rightly said, that some of the corporates, but again, I would as per my experience, even the API-driven banking is much restricted to the MNC cohort of the wholesale client base today. Even some of the large local groups still, from their own side, maybe they are evolving as a proof of concept of this API-driven thing. But yes, coming few years will eventually give us much flavor on how eventually it shapes up in that way.
Thank you, Hamayoun.
Thank you. Okay, so I will move ahead with a question that I posed to all three of you. So what would you pick as the most critical B2B payments and transaction banking related innovation that we should expect to experience in the next 2-3 years in the region?
So I think we have talked on B2B, and primarily it covered your question that what innovation is. So I think we are missing some very basic things to address that. Even the instant payment, which is happening under the NPSS umbrella, under IPP portal, which again, yet to be delivered anytime soon. I mean, we are on the very last leg of, in terms of timeline. For this country or for this region, I think this is going to be a massive transformational play if we really capitalize on that. And I partially touched on some of the enablers it will bring, as basic as West is witnessing for years now in terms of beside the real-time credits. And again, the challenge would be I'm really looking forward to handling that KYC, because today there is a real-time service available by central bank, but it caps at 20,000 dirhams sort of a transaction with certain types of transactions in itself. But how, when you go into hundreds of thousands or millions of payments, and that's true on an instant basis, how you address the KYC component in that instant, these are some of the things which eventually shapes up the proposition. But if we are able to do that, I think this is the biggest look forward sort of innovation, I believe, in B2B payment space. I partially touched, again, for the sake of repetition, if we get hold in terms of cross-border payments, some enablement where the reliance on SWIFT can be diluted. Even SWIFT itself is adjusting to the reality by bringing on various value additions in terms of SWIFT GPI trackers, just to add that sort of comfort to the clients to figure out where the transaction is during the entire course of its life journey. And then there are, SWIFT Go, and with now SWIFT ISO 20022, which is another very, very massive innovation they are bringing after decades of their current empty system. While the SWIFT may itself adjust, we need to see in cross-border payment, at least in the region space today. I think beside Buna, I've yet to see, I've talked about a Gulf payment company which will eventually transpire into a regional connectivity. That are some of the very basic building blocks today we need to fix before we go into a very second leap of innovation that we have to think through.
Thank you. Anith, Parag, anything you'd like to add to that?
So I would say NPSS is going to drive a lot of change in terms of behavior, of how payments are made within the UAE. And if you link that up to, what do customers or corporates really want in the B2B space? I want to be able to pay quickly. I won't use the word instantly, because instant is, again, misunderstood. There are no instant corridors, or there are very few instant corridors. Eventually, it goes down to routing the payment through your local ACHs, and unless you have direct API connectivity with a correspondent bank, very difficult to get instant corridors. So what do corporates really want? You want to be able to pay as quickly as you can, and to do that in the most transparent way and with the least amount of charges. Now, depending on how NPSS facilitates that within UAE, because the central bank is yet to announce charges and schemes around what will be the MDRs for various payment modules there, will define how B2B payments or B2C payments today are being run. So a large part of what is being run today is entirely on the cards rails when it comes to B2C. P2M payments, peer-to-peer, peer-to-merchants, will evolve with NPSS. And along with that, our corporate customers will also evolve in terms of their collection standards. Everybody's seen the growth in e-commerce solutions, right? So the spread of people moving from physical POS-based terminals to e-commerce solutions has really transformed over the last couple of years, I would say, post-COVID. And you see much higher numbers pushing through, and you see a lot more fintechs coming into that space. This sets an industry standard within UAE, similar to what UPI has done in India. Of course, very different scale compared to the country size, but still a standard that it's set. And I think that's really going to drive behavior and will define how solutions are being built by banks or acquirers or third-party service providers around the space. Because at some stage, central bank will look at opening it up to open banking. Post that, they probably may open it up to crypto, because there is a country push towards crypto. I think it's going to define, in the next 3 years, it's going to define payment journeys within this space, both from B2B and B2C side. So I would say that's the most critical one.
Thank you so much. Parag, would you like to?
Yeah, I mean, I think the two of them have kind of
Yes, covered.
Because your question was what is one super whatever innovation. Like it's very evident. It's you can't really put a finger right now on that. There are several moving parts of the story. But like I said in my previous this thing, you will see once IPP is in place, you're going to see some amazing acceleration in the kind of products that people will start rolling out, right? Because now the rails are in place. Now you've got to start looking at how do I build different kind of services on top of it in order to exactly solve the problems that the corporates or the SMEs have. So you'll see a lot of that, and there I think all the initiatives that the central bank, the whole fintech ecosystem that is really shaping up in this part of the world, I think that's really going to accelerate a lot of those things going forward, right? So I see a combination of multiple things. Specifically on cross-border, I think some great initiatives like Hamayoun talked about, SWIFT, GPI is being one. They launched SWIFT Go recently, and that's again a game changer, at least what we think. But on the other side, there are some very smart instant payment, Anith, that I have seen now, which is basically Indonesia and Singapore exchanging a QR code-based instant payment. So these are cross-border payments. These are small SME payments or small P2P payments, but they are cross-border and they are using the QR code as the instance. I don't know whether you guys read it, but very interesting initiative by the Central Bank of the UAE Central Bank, and then BIS along with HKMA, Hong Kong Monetary Authority, on the CD on the digital currency side, right? Central bank digital currency side. So the pace of change is going to be is so rapid that, and once you have the rails in place, you'll start seeing a lot of these innovations coming up. Yeah.
Right, thank you so much. I think we are out of time, so I would like to thank my panelists.
Thank you very much.